Today, Ooooch, Bitcoin to 11,000. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and problem news with a distinctively Australian flavour. Well, as I write this, Bitcoin is sitting at 18,155 US and Ether is at 944.40, and the altcoins are also down. So the talk is now twofold. Is this just a repeat of past cycles suggesting a recovery later, or is this something more, which might herald a fundamental change in the crypto market and not in a good way? Well, as nerves heightened after the United States Federal Reserve's comments on the inflation outlook, crypto markets bore the brunt of a sell-off, which began after shock consumer price figures the week before last. Losing the psychologically significant 20,000 US mark, Bitcoin also achieved a lifetime first, dropping below its previous halving cycle's high for the first time in its history. The largest cryptocurrency had until now avoided such a move, this being reserved for altcoins, notably Ether, earlier in the week, which of course has now slipped well below the 1,000 for the first time since January 2021. Reacting, commentators attributed the latest weakness to liquidity problems at investment fund 3 Arrows Capital, commonly known as 3AC, in addition to existing troubles tied to fintech protocol Celsius and the overall macro environment, and of course Babel. Analysing the worst-case scenario, meanwhile, popular analyst venture founder began to put more faith in 14,000 US, which would be an 80% drawdown from current 69,000 all-time highs. And they said, the speed of the $20,000 capitulation surprised us. We thought it would have taken a little longer. But knowing the macro narrative, stock sell-off, QT taking away liquidity, huge players like 3AC dumping, it makes sense. That being said, they hold their most bearish Bitcoin downside target to be $14,000 US. Even if it goes lower, I don't think it would stay lower for any meaningful period of time, they said. I'm buying on the way down, but 14,000 US all in Bitcoin for me. I will sell everything I own and put it into Bitcoin, they said. Between the current spot price and that target lay areas where whales had purchased significant amounts of Bitcoin in the period immediately after the March 2020 COVID-19 market crash. And as on-chain monitoring resource WhaleMac noted, these potential bubbles of support lay at 19,000, 16,000 and 14,000 US respectively. And other Bitcoin price bottom predictions run as low as 11,000. And exchange inflows spiked to almost 3.5-year highs, with data from on-chain analytics platform CryptoQuant showing users of the 21 major exchanges sending coins to their wallets en masse from June the 14th. As Bitcoin and the US dollar fell to lows of 20,800, panic appeared to set in among traders, and despite a reversal. According to CryptoQuant data, this is the largest daily inflow since November the 30th, 2018. On that day, exchanges recorded 83,481 Bitcoins of net flows. Now, May the 9th, 2022 ended with 29,082 Bitcoin in net flows from the platforms monitored by CryptoQuant. And data from on-chain analytics resources CoinGlass, meanwhile, shows the extent of the downside bias on the exchanges. Concerns may now turn to whether even more sell-side pressure will emerge in Bitcoin markets over the coming days and weeks. Around a month after the 2018 influx, the Bitcoin US dollar hit its cycle bottom of $3,100. That's 84% below its prior all-time high of $20,000. Now, an 84% drawdown would mean a bottom of just 11,000 US. The abrupt dip below 20,000 came during weekend trading, where thin order book liquidity amplifies volatility. And so the Bitcoin US dollar sealed a 37% loss for the first time 2 weeks of the month, making June 2022 the worst month of June on record, according to data from CoinGlass. And year to date, the pair traded down almost 6% at the time of writing and over 7% below last November's all-time highs of 69,000. And as Cointelegraph reported, historical trends suggest that 80 to 84.5% is a classic drawdown target for bear markets, which is putting the Bitcoin US dollar at between $11,000 and $14,000. Bitcoin still needs more volume and volatility than at present to match volume levels at previous bear market bottoms at the 200-day moving average, said popular trader and analyst Rec Capital. Continuing analysis of Bitcoin's 200-week moving average, which they see as a key lifelong support line. Now, you can make what you will of these various charts, because I think we are in a whole new ball game. The point we have to come to is that interest rates are now rising significantly, and that changes the equation when it comes to the Bitcoin. Not least because, of course, there are no returns. It's all about capital movement. And capital movement, the downside is, frankly, very negative. So I am not backing any particular trajectory here with regards to future price levels. All I'm simply underscoring is the downside uncertainty that others are seeing. But certainly there's little upside potential in the short term. The question is, as I posed earlier, does this mark a fundamental shift in gears for crypto and Bitcoin in particular? And where does that take us? Or is it just the bottom of the next cycle, and the next cycle from there is up? Well, of course, believers will still hold to the view that the next cycle is up, and they will hold their nerve. But interestingly, more and more people seem to be drawing the conclusion that this time is different, and getting out is perhaps the best and safest route. But meantime, many people will have lost a shirt or two in the process. Just one more reason to be cautious about Bitcoin. Remember, there's no underlying asset. It's all about belief. It's all about momentum. It's all about what people might think the future is going to look like. And I'll be honest, I'm not sure the Bitcoin in its current visage has much future at all. Now, if you ask a different question, that is, where does the blockchain thinking take us? Well, that's a different story. But maybe these first generation type coins is actually nothing to do with the future of the blockchain at all. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.